Hello everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. Another challenging week we had here with some volatility starting up again. Some of the stocks were up. We saw some biotechs that were up and they were doing strong. Some healthcare stocks were doing well too, and commodities were getting hit particularly hard. We'll talk about this stuff and much more. First, I want to talk about a quick headline that I saw here on Friday. The May unemployment figures came out on Friday, and the Associated Press had the headline, unemployment fell in fewer than half of the United States. And I started reading that and figuring to myself, isn't this the same as reading employment fell in the United States? And that seems a little more to the point to me. Really, the sum of the story was that unemployment rose to 9.1% in the United States, which really should have been the headline, but media likes to self-gloss and make things look a little better than what they really are, and kind of fade away from the truth a little bit sometimes too. And the numbers come out and it's hard sometimes to interpret things and figure out what they really mean, and then they revise these numbers and you don't know what to believe anymore. We like to look at three key principles to determine what's going on in the marketplace. And if you watch the show regularly, you already know these key principles. Number one, the US dollar and the commodities move in the opposite direction. And point two, commodities and interest rates, they move in the same direction. And last, three, high interest rates, they're bearish for stocks. And so knowing these key relationships, we're going to look for the number of positives versus the number of negatives, and we're going to find out where the strength is and where the weaknesses lie, and what the forecast for next week looks like. And so we begin with the US dollar. And on the daily chart of the US dollar shows we had another strong week. Down below, 0.1 of stochastics remain positive, and they're reaching into overbought territory. Gave us one a green mark. Above that, 0.2. Still have confirmation on those MACDs. They're continuing to rise. Looks like the histogram bar is flattening out though, so we gave this one a yellow mark. Up top, 0.3, the relative strength index. Looks like it's bouncing off the top here. Got a little resistance there too, so we gave this one a yellow mark. And a look now at the weekly chart. Down below, 0.1 of stochastics. Got another rise. Looking good here. We gave it a green mark. And 0.2. MACD still confirming. They're moving a little higher. And the histogram bars, they're still on the rise. Gave this one a green mark. Up top, 0.3, the relative strength index. It's nearing some resistance too, so we give this one a yellow mark. And so summing up the US dollar, we analyzed daily charts and the weekly charts. Over on the daily charts, we found the stochastics were positive and we gave them a green mark. MACD's relative strength index were neutral, so we gave that a yellow mark. Over on the weekly chart, stochastics and the MACDs look strong, so we gave that a green mark. Relative strength index was neutral, so we gave that one a yellow mark. And for a total, we had 0 red marks, 3 yellow marks, and 3 green marks for the US dollar. And now we'll look at the commodities represented by the CRB Index. And on the daily chart of the commodities, things are continuing to look worse. Got a slide on those stochastics. 0.1 shows we gave it a red mark. 0.2 shows where the MACDs are confirming that sell-off. They're moving lower too, and histogram bars are dropping. Gave it a red mark. Up top, relative strength index continues to find a new low. Gave this one a red mark. And a look now at the weekly chart. Down below, 0.1 of stochastics. Looks like we're reaching lower. Got another sell signal here as the black line crossed over the red, so we gave this one a red mark. And above that, 0.2, the MACDs are continuing lower, and the histogram bars are continuing their drop. Gave this one a red mark. And 0.3, the relative strength index. Looks like we're going to head lower. Gave this one a red mark too. And summing up the commodities, we analyzed daily charts and the weekly charts. It's not looking good on either. On the daily charts, stochastics, MACDs, relative strength index were all negative and gave them a red mark. And over on the weekly charts, same thing, all negative, all red marks. For a total, we got 6 red marks, 0 yellow marks, and 0 green marks for the commodities. And we'll move on to the 10-year Treasury yield. And on the daily chart, the 10-year Treasury yield, 0.1 of stochastics are moving lower, gave it a red mark. And 0.2, the MACDs, they're not doing much of anything but looking negative, and the histogram bar is below 0, so we gave it a red mark. And 0.3 up top, relative strength index may be getting ready to turn here, but it's been declining, so we gave it a yellow mark. And a look now at the weekly chart. Down below, 0.1, the stochastics are oversold, and it looked like we're getting a buy signal here, so we give it a yellow mark just to be cautious here. And up top, above that, 0.2, the MACDs are continuing their decline, and histogram bars, they're looking negative too, gave this one a red mark. And up top, 0.3, the relative strength index continues in decline, gave that one a red mark too. And summing up 10-year Treasury yield, analyzed daily chart and a weekly chart. On the daily chart, we found stochastics and MACDs were negative, gave them a red mark. And the relative strength index was neutral, so we gave that a yellow mark. On the weekly chart, same thing. Stochastics and MACDs were negative, gave them a red mark. And relative strength index was neutral, gave it a yellow mark. For a total, we got 4 red marks, 2 yellow marks, and 0 green marks. This means that interest rates have been heading lower. They continue lower, which means money is flowing into the treasuries themselves. So treasury prices are doing well as the yields go lower. And we take a look now at the Dow Jones Industrial Average. And on the daily chart of the Dow Jones Industrial Average, down below, point 1 shows stochastics. They're oversold and they're ascending slightly higher, but not a lot going on here. We did give it a yellow mark. And point 2, MACDs, they look like we want to get a little bullish signal here. Black line is converging on the red line, and the histogram bars are rising toward the 0 line. So we give this one a yellow mark. And up top, point 3, the relative strength index. See a little bounce there, looking for direction here, but we gave it a yellow mark. But over on the weekly charts, things continue to look bad. Down below, point 1, the stochastics. They're looking lower. Gave this one a red mark. Point 2. MACDs are confirming, and the histogram bars are dropping further too, so we gave this one a red mark. And up top, point 3. Doesn't look like we've got a recovery here in the relative strength index yet, so we gave this one a red mark as it's continuing lower. And so a look at the Dow Jones Industrial Average. We analyzed daily charts and the weekly chart. On the daily chart, we found the stochastics and MACDs relative strength index all improved. We gave it a yellow mark. A little caution there. And on the weekly charts, though, stochastics, MACD, and relative strength index all still look negative. We've got 3 red marks and 3 yellow marks, 0 green marks for the Dow Jones Industrial Average. It's really showing that we still have a way to go before we can turn positive on the Dow. Though we do see a little improvement here. It's not looking great for next week. And so we've been coming up with scores for the US dollar, the commodities, 10-year Treasury yield, and Dow Jones Industrial Average, and we've been looking for where the strengths are and where the weaknesses lie. We've been doing this by analyzing the number of positives and weighing them against the number of negatives to come to a conclusion that way. And this week in first place, and clearly it was the US dollar with 3 green marks, 3 yellow marks, and 0 red marks. And coming in second place this week, it's the Dow Jones Industrial Average. See a little improvement there as we had 0 green marks, 3 yellow marks, and 3 red marks. And in third place, we had 10-year Treasury yield, which is 0 green marks, 2 yellow marks, 4 red marks. That means 10-year Treasury prices are still moving higher. And the commodities, CRB Index came in last place again. Got 0 green marks, 0 yellow marks, and 6 red marks. And last week we had mentioned that the CRB was headed lower, and it looked like it was going to drag the interest rates lower with it, as we knew the correlation is that they move in the same direction. And the US dollar, you can see that that's moving in the opposite direction as it's moving positive versus the CRB index. And the Dow Jones Industrial Average, we're just seeing a little bit of improvement here as interest rates seem to be hovering around a lower area here. And over on the market gauge, here's where you can see it all. We're supposed to be as far in the right column in bullish territory as possible, and as far away from the left column in bearish territory. And again, the US dollar, it's right between neutral and bullish territory. It's moving higher. And that's in first place. Second place was the Dow Jones Industrial Average. It's right between bearish and neutral, but it was good for second place. 10-year Treasury yields moving lower, and we'll see that that's a little closer in bearish territory, moving towards the commodities as they move in the same direction. And CRB Index in last place, as we had 6 red marks again this week, and it's moving in the opposite direction of the dollar as the dollar is putting pressure on the commodities. And we look now at our holdings for this week. We started out on January 28th with $10,000 and we got a 12.5% gain. We're locked in at $11,257.12 as we went into cash 2 weeks ago. But one of these stocks, the worst performer, is still going to get sold. And this week, We have Dollar Tree starting out at $61.75, and Hansen Natural, which came in second place last week, starting out at $71.59. Edwards Lifescience survived the portfolio last week, starting out the week at $84.20. One of these stocks is going to get sold. Let's see how we did. And our number one performer this week, coming in first place, it's Dollar Tree. And opening the week at $61.75, we closed the week at $62.65. Got a total gain of $29.70. That's not good because we were not participating, so that's actually a $29.70 loss. Let's take a look at the chart. And the chart of Dollar Tree, it just doesn't look good still. Down below, 0.1 is stochastics. Getting a sell signal here as the black line crossed over the red, and we gave this one a red mark. And 0.2 shows the MACDs are still declining and histogram bars are still flat, so we gave this one a red mark too. And up top, relative strength index, it still continues on sideways, gave this one a yellow mark. And so that only leaves room for one more stock in the portfolio already. One of the stocks is going to remain, the other is going to get sold. The first stock up, it's Hansen Natural. The second stock up, Edwards Lifesciences. Coming in second place and surviving the portfolio, it's Hansen Natural. And opening the week at $71.59 and closing the week at $72.31. Got a gain of $16.56. Hey, it's not good for us, but let's look at the chart. And the chart's still indicating some weakness here. Down below, 0.1 is stochastics are continuing to dive. Gave it a red mark. And above that, 0.2 shows the MACDs are continuing to confirm as they're looking lower. And the histogram bars, though, they leveled off, but still very negative. Gave this one a red mark. And up top, 0.3, relative strength index has a small bounce here. Not a lot going on. Trend still down. Gave it a yellow mark. And so Edwards Lifesciences is out of here. And opening the week at $84.20 and closing the week at $84.01. Got a loss of $4.56. That's kind of the direction we thought we'd go this week. Let's take a look at the chart. And a look at the chart of Edwards Lifesciences down below, 0.1 the stochastics. They're continuing in negative territory here. There's not much going on. Give it a red mark. And above that, 0.2 shows MACD is still falling. And the histogram bars, though, they're moving up a little higher. But we gave it a red mark. Still has ways to go. And up top, 0.3, relative strength index. It looks like it wants to climb higher. We gave it a yellow mark. A little caution. And our final results this week, in first place for the second week in a row, it's Dollar Tree. Got a gain of $29.70. And Hansen Natural came in second place with a gain of $16.56 and surviving the portfolio, knocking out Edwards Lifesciences, which had a loss of $4.56. And we've got a total loss of $41.70 because we've been in cash and didn't participate in this gain this week, but still not a lot going on. And every week we get a new stock in the portfolio. For the past 2 weeks we've been settling in cash and staying put with a 12.5% gain. And this week we're going to do the same thing. We're going to be in cash. And I know it's boring, but I think that's where the direction is going to be trending right now, is we want to lock in our gain and not put it at a lot of risk as things continue to look worse. As I was looking through the Investors Business Daily this week, there weren't a lot of stocks to choose from. I think I found 7 stocks that were worth looking at. Not a lot, but certainly I don't want to pick 3 stocks out of 7 stocks when really there's 50 to choose from, and really the trend for most of them is down. Looks like some of those biotechs are stronger, but really not a lot going on out there, and there's really no need to take a chance. We'll just wait for the evidence to be stacked in our favor before we buy some more stocks. And so our holdings this week, we got first place, we got Dollar Tree. got a total value there, an actual value of $2,039.83. Hansen Natural, we got 23 shares of that stock, $1,742.23. We got cash in the rest of the portfolios. We're not going to sell the worst performer next week because it doesn't really make a lot of sense to have a competition just between two stocks. We're going to hold these stocks, even though they're in a cash value position right now. We're going to pick them up again, hopefully, when they get a little cheaper here. We're going to continue in cash looking this week, but if things look a little better next week, we're going to go ahead and pick 3 more new stocks to add to the portfolio. Otherwise, we're just going to hold another cash position. We're not going to fight where the trend is heading. So cash looks good. It looks good. What can I say? So anyway, these stocks this week don't necessarily have to perform because they might not be out of here.